Well, with many uber bullish calls for gold in 2021, my guest today has actually lowered his a bit for the tail end of the year. We'll get to understand a little bit why. Please welcome to the show, John LaForge. He is the head of real asset strategy for Wells Fargo. John, always good to do an outlook with you.
Yeah, good to see you, Daniela.
Yeah, well, I say you lowered your forecast. I guess you were a little bit more bullish on gold, but it's still a bullish forecast you have. So
It,
let's
yeah,
talk about it.
it absolutely is. So we believe in the reflation trade, and you can play the reflation trade many ways. You can buy commodities generally. You could be off in the crypto space. You can buy tips. You could do lots of different things. But what gold offers in a world where we're debasing currencies with all the money printing and negative real interest rates, gold is one of those good bang for the buck types. It's probably going to give you what you want as a hedge with probably low volatility.
So your original forecast was 2,300, 2,400 by the end of year end. You've shaved off a bit, lowered it a bit here to 2,100, 2,200 end of 2021. Why the a few bucks, $100 buck pullback here?
Yeah, it was our fixed income group. So they took their targets up on the long end of the interest rate curve. So they took up just a little bit. They took their target for their 10-year and their 30-year up by about 25 basis points. To me, that just told me real interest rates, which are negative
Right.
globally, just weren't going to probably go too much more negative in 2021. And that was one of those tailwinds. It was a strong tailwind pushing gold. If you looked at correlation charts between what was driving gold over the last 3 years, most of that time it was declining real interest rates.
But John, what about the rollout of the COVID vaccines, which is not going as smoothly as planned, and obviously the stock market reacting to that as we speak today. The fear that the dollar will head lower here, fear of greater inflation coming. Wouldn't those be headwinds for gold?
I would say more they're neutral to even positive, maybe. So if you take the COVID stuff,
Right.
this is probably just one more round of stimulus in another round of stimulus. We believe that we will get these vaccines; they will roll out, but it might get a little, choppy. It's not going to be this smooth transition. So opening up countries, opening up states, just isn't going to go necessarily that smoothly. So the more chance there is for stimulus, the better chance I think gold could actually do. Plus, you have with gold, we were at 2,100 in August. We're 1875, 1900. So it isn't like we're starting from 2,100 and saying, hey, you have to have everything go right in 2021. Now I think there's some margin of error that if I'm wrong about more stimulus and it's just negative rates and lots of money sloshing around, that's kind of why we have the 2,100 out there, not a 2,400, 2,500 kind of
John,
number.
I must ask you about the Bitcoin versus gold debate. I've asked other
Yeah.
guests this, and without speaking, about it at nauseum here. But we have Goldman Sachs, just coming out saying we shouldn't see Bitcoin hurting gold. Yet JP Morgan put out a full report outlining how Bitcoin will take a big chunk out of gold, and that we're seeing, major outflows out of gold ETFs flowing into the Bitcoin ETFs here. I guess as a neutral participant here, John, how
Yeah.
do you see it?
Yeah, I haven't seen this last 3, 4 months that gold has trailed everything. It's trailed all beta assets, not just Bitcoin and crypto. So once we got past the elections and the pedal got kind of put down on the reflation stuff, everything that was beat up started doing well. Anything with high beta started doing well. I think gold got caught up in that where it was in a correction off its 2,100. And then the beta trade started and gold just kind of was out of favor. I'm not a huge believer. I've seen the stats. I mean, I see it, but I didn't see the connection. No one can prove that connection that the money went from these gold funds into Bitcoin. I just don't see it. I saw the gold money going into more beta beta sensitive things. Bitcoin's one of them, but not the only one.
John, you are really the commodities guy at Wells Fargo. So tell us, outside of gold, what's looking hot to you?
Yeah, it's still the same platinum, like silver, as I think they're starting to catch up. We're starting to realize there's a reflation trade, and you can have some of these silver, platinum that could be used, and I've seen some of your videos on this too, that can be used in the green energy revolution. Like you can have different avenues for this stuff. And there are arguments both ways, but I kind of see it as a plus.
How real is the platinum shortage we're talking about? I'm
Yeah.
seeing, mixed reports here. What are you hearing?
Yeah, I think there is. And I'm a little surprised it took this long for the reports to come out because it frankly didn't take a rocket scientist to figure out no one was working, no one was doing anything.
Right.
Yeah. So no, I actually still see that shortage. It's still there. And as long as, frankly, palladium doesn't keep going up, I think what was happening with partially some of these supply is palladium was being dug out because it was so expensive. And you had this platinum was coming out too. And it's almost a little bit like oil and natural gas. So we're kind of giving the platinum away in a sense because it was a byproduct. But so I think there's a shortage now. But if the longer term story with platinum is I think there's use there. And I'm a big believer in history. And there is a long-term connection between gold and platinum, where platinum, because it is rarer, tends to be more expensive, and it's still half the price. So I know why. I know the catalytic converter kind of stuff, but these relationships eventually revert back because platinum will be used again.
John, let's wrap up now with base metals. A lot of talk that 2021 might be the year of copper.
Yeah, I doubt it. I think 2020 was the year. We're still kind of in a shortage with copper too, though. So if you look at the LME numbers, year over year inventories are still negative. So even after all this, demand and pull, you'd think there'd be maybe a little bit less demand. You'd start seeing storage fill up, and it's not happening. I think it shows you how commodities run in these super cycles, where if you spend 10 years of not really digging this stuff up, as soon as you get a little pull in demand, there just isn't enough supply out there. So I still think it's good, but I'm not expecting $4 copper. I think we'll probably end about here.
All right, John, I guess final thoughts for investors watching and listening to your every word as we're about to enter this new year.
Yeah, I'd say keep with the reflation trade. We haven't had it in a while. Commodities had really been kind of dead money for about 10 years generally, and we're probably coming out of that funk.
Well, happy 2021 to you. Happy everything, John. Thank you
Thanks, you
so much.
too. Thanks, Daniela.
Always welcome on the show. And thank you so much for watching. We'll have much more for you on our Stansberry Outlook 2021, Finding Equilibrium. So be sure to stay tuned. In the meantime, you can follow us on all our social media channels. We're on Facebook, Instagram, LinkedIn, and Twitter. Thanks for watching. I'm Daniela Cambone.